Hello, hello. Welcome to the 5 Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the 5 Talents Podcast. I am humbled, appreciative, and grateful as always to have another amazing guest on our show, Miss Monick Halm. Monick, thank you very much for joining. How's it going?
It's going great. Thanks for having me, Abel.
Yeah, I'm very humbled and, like I said, appreciative. You have a tremendous name and a tremendous, just kind of status in the commercial real estate space that I know in our community. It's a pretty small one. So I was very, happy to have you as a guest when you committed, because you've got a very special, for me, a special, unique platform to help a lot of female women investors in the commercial real estate space. And I'm happy to bring any exposure that I can to what you're doing in your cause. So I just wanted to say thank you before we get started.
Thank you for having me. I'm honored.
Yeah, you're this is going to be a great show for anybody watching. If you don't know Monick, she's really an educator and advocate for women to create passive investing income streams through real estate investing. So her goal, one of them among probably others, is to assist 1 million women achieve financial freedom through real estate. And she's the founder of, you see in the background, Real Estate Investor Goddess. And she's a real estate investor herself. She's a syndicator, 14 years of investing experience, and like across the board, a lot of different asset classes. So I'm excited to hear what we're going to talk about. But she's done multifamily, mobile homes, RV parks, flipping, commercial, vacation rentals, ground up development. And she owns about 1,300 rentals across 6 states. So it's an impressive background, and I'm super excited. And well, anyways, Monick, let me turn it over to you. And if you can, give us an introduction, who you are and what you do in your own words. That would be an awesome place to start. And we'll just have a great conversation.
Sure. I'm an investor first and foremost, and then I'm also about helping women, as you said. It came as this divine download for me. After I went to it was actually my first real estate seminar, and it was for syndication. And it was the day after this 2-day seminar. I'm in the hotel gym on the elliptical, just thinking back upon the weekend. And I was thinking on that room that had 120 people or thereabouts. And I think 8 were women, 2 of
Mm,
which were working in the back.
mm-hmm.
And I
Wow.
was like, there's there are no women there. And I started my career as an attorney, and I transitioned out of that, and I'd become a coach, and I was actually already working with women around money, and it just came like this download to bring women into that room. It's like, this is how you build wealth,
Mm-hmm.
truly, right? The real estate is, 90% of millionaires become so through real estate, and for time immemorial, it's been real property that where people have generated and passed down wealth, but there were no women there. And then I had joined this high end mastermind. It was 19 men and me. I was the
Mm-hmm.
only
Mm-hmm.
woman. And yeah, and it just not I received this message and from the divine, and not the how to do it, but this what. It was like, here's this mission, should you choose to accept it. And everything in me just was like a yes to it. And I was like, okay, I'll do this. Just guide me. Let me know what's my next step. And little by little, it's been growing as community has it's just blossoming and it's incredible.
Yeah, that's so awesome. Thank you very much for sharing. And my wife is so she's a commercial real estate investor. She's a single family investor with me. We've been investing since 2008 together. But one of those conversations that we've had many, many times is we started in tech. So I was a 13-year tech veteran. She was like, I think close to 8 or 9 years as well. She was getting up there in number of years. And to have her in the tech space was also one of those things. When she looked around, there was very few,
Yeah.
female or women high performers, or the, the people with hardcore technical skills and abilities. And it's just when you look around in general, people of color and also females, there are less in almost every industry and in some of the top positions or top roles or top top highest performing percentages of people, individuals, and that's a lot of struggle to overcome. So it's definitely warranted your mission, and I'm excited to to help any way I can.
Yeah, I was a corporate litigator, so that's how I started my career in life. And yeah, so I was used to being the only woman in the room.
Yeah,
It was not that was not unusual for me, but I nevertheless I thought, you know, well, I didn't even think. I really it was just it was given to me. But this is though an industry that women are great at. And once they get into the game and pass their fear, we actually tend to have even better results
yeah.
slightly than men. And then it's flexible and it's a great thing where you can be a mom and do all the things and and just have financial security as well as financial freedom. As I think about, especially with this past year and COVID, what we've just been through, I have a lot of flashbacks to the Great Recession, 2008,
Hmm.
2009. I was working as an attorney as in 2008. I was 5.5 months pregnant. My boss called me into his office. I thought to give me a bonus because I've been working so hard, but
Yeah.
instead he fired me. And so that was not expected or welcome, but in the end, it was a big gift that he gave me. Didn't feel like that at the time, but I am grateful now. So he had fired me. I was quite pregnant at the time, so I thought, okay, I'm just going to wait until after I give birth, have a short maternity period, then I will look for a job. So my daughter was born in late August of 2008. Within a month, the markets were crashing. The economy
Yeah.
was in free fall. A couple months after that, my husband's business was down 90%. It was a really, really challenging time, to say the least, to be unemployed with a newborn and have have the situation that we're in. Luckily, we had a couple real rental properties, and
Mm.
that is what managed to keep a roof over our heads at the
Hmm.
time.
Hmm.
And we were able to sell, and then we started to flip, and we came out of that through real estate. And as I think about that time and I look at what's going on right now and all these people that are so precarious, I just want more and more people to think about and recognize what real estate could do for them. And I think of it like this because this is the analogy I give. Most people are so financially unstable, even ones that have good jobs, they think, right, until they get fired because you have like one, I guess, like a table with like one leg, and your one leg is your one income, right?
Hmm. Hmm.
And if you lose that one leg, your table comes crashing down.
Hmm.
But with real estate, you can create multiple legs, mostly passive. And they're working without you having to work, whether you're sleeping, you're vacationing, you're doing your other job, right? You have all these like extra legs. So this economic situation is so different for me and my husband, for our family, because we've created so many legs since then. And I just want, like, whoever's listening and whoever's thinking, it's like, create those legs for yourself, right? Like, create that like what I call crisis proof finances. So whether it's a sickness or a divorce or a job loss or a global pandemic, just saying, could happen, that you are okay if you
Yeah.
lose one leg.
Yeah. the I've heard this saying multiple times, and I've seen it, multiple places, that the average, millionaire has seven different streams of income, and really, multimillionaires, have many more. And really, you can become a millionaire with just two to four in streams of income, and maybe that's your job as one of them, as a W-2 high performer. I'm sure as an attorney you made pretty good, a pretty good check, but that was, like you said, that was one income stream, and when you lost it, that was it. I felt the same exact thing. And mine was 2016. So we were at Rackspace as an IT hosting company, and we helped scale a company from $100 million to $2 billion when I finally exited.
Wow.
And the company went, public and did all that stuff, and had my stock run and XYZ. But at the very end, it was a different company than when I had started. And I guess I became less valuable to the company, and it was clear. And then my pay was pretty high after being there 10 years. And that's, those things are changed quickly, right? Oh, I had a job, and now I'm not employed at this place that I thought I was going to be there for 20 or 30 years. And, just didn't end that way. So I had started, me and my wife started investing in single family real estate since 2008. So we were able
Good
to buy
thing.
about 8 houses, and that's the platform that allowed us to scale or move to commercial real estate. So I very much resonate with many multiple streams of income, and it made a lot of things easier in many transitions. So that's awesome.
Yeah, for sure.
And so tell us what you're doing today, because we've seen this tremendous background. You have so many, just doors up, real estate investments, multiple different streams of income across multiple different asset classes. You were big on multifamily, and you kind of have transitioned recently. Maybe start there. Like, tell us about your multifamily business and then what you're doing today. That'd be an awesome kind of jumping point here.
Sure. So, and I'll go back a little bit to just
Sure,
share
sure,
like my
please.
transition and into that, and from like being a flipper and
Yeah,
more in like
yeah, I
the
love it.
single family duplex realm to going big, because I didn't know anything about commercial real estate. I didn't really know anything about real estate. I'd just been taught to buy your home, and it was
Yeah,
just because I lived in LA, was just so expensive, and even as an attorney,
jeez.
I
Yeah.
needed to house hack in order to be able to like afford a house. So I was sort of like an accidental landlord. And then we got into flipping after the crash, and properties were on sale. And then around like 2015, they're not so on sale. It's so competitive. I live in Los Angeles, which is crazy expensive, and I'm thinking I need something more passive, because flipping is it's so active, and
Hmm.
it was
Hmm.
getting harder and harder. And that's when I found, I was looking for a fourplex in LA. It made no financial sense, nothing cash flowed. And then a friend of mine introduced me to Robert Helms, who's the host of the Real Estate Guys radio show, um, and he was like, "Yeah, he's gonna be in LA. Why don't you come talk to him? He's done hundreds of millions of dollars worth of real estate." So Robert told me that next day when I was talking to him, is like, first of all, he's like, "LA is a tough market. I always say, live where you want to live, invest where the numbers make sense." And I went,
Yeah.
"Oh, like that's the thing? Like you can do." I assumed you had to invest where you lived. And then he said, "Oh, and you can do that fourplex by yourself, but you're limited to your own capital and credit. Alternatively, you bring a group of investors together and you get a 100 or 200 unit apartment building." And I was like, "What?" That's a thing. So mind blown. And that's when I got in. And so I met him in late 2015, 2016. I was at a syndication seminar. And then that year, we just had this tremendous growth. So our first investment was actually a mobile home park with a friend, and then we passively invested in in about 800 units, and then we got two apartment buildings that year, a 77 unit and a 51 unit in Albuquerque, New Mexico.
No
And
kidding.
then So that's how we started, and then we started syndicating more, and we we realized, having done that, we were more on the operation side, on the apartments,
Hmm. Hmm.
and then started realizing, we like the money side more than the
Yeah.
operation side.
Yeah,
And
definitely a couple different, more than a few roles in the commercial space.
yeah,
And you can break it up in a few different areas, but operating is one, and then raising capital and investor relations in the front is another, and
yeah,
financing and managing, all different types of roles.
yeah. There was, so the investor relations, capital raising side, that was like where that was our forte and our strength, what we preferred.
Yeah.
So started to do that, but the nice thing about that is it gave us, we could have more breadth. We could go a little wider in terms
Yeah.
of the asset classes that we were doing. We didn't necessarily have to know it like, if you're operating, you really need to, that I wanted to partner with operators that had like decades of experience. I like really, really know what they're
Hmm.
doing, to bring that experience to. So I could, and we've always partnered with people that had more experience than us.
We've
At
done
the
the
beginning,
same.
even when we were we got our first apartment buildings, because I was, if I'm taking on other people's money, I just want to give them the best opportunity, best chance for success. And so we just partnered with different people. And and as we were doing our apartments, and I loved, multifamily, it made sense. But what happened was, in late 2018, we sold our Albuquerque properties, and I'll be honest, they were kind of like C minus. C's. Like, one was like, they're like C plus, one was C plus, one was C minus. Not that they were not beauties, and they were a little troubled, those properties. We sold them at a 4 cap.
Wow.
Yeah, wow. Which I was
What
like,
did you what did you buy them at?
oh my, like 8 cap. I mean, it was crazy.
Wow.
Like, it was, yeah,
Uh, so,
it was a big uh increase in sales.
to pause you real quick for our passive investors or maybe new syndicators. Sometimes I get so enthralled in these stories, I forget to break some of this stuff down, which is awesome. One of them, though, is the cap rate. So it's essentially capitalization rate. It's a way to value properties. And so if you were buying at an 8 cap, typically the higher the capital rate, the capitalization rate, the better the price, and the lower the cap rate, it's compressed, the higher the price. And when sometimes when you underwrite deals, there's a bunch of rules of thumb, but some of them are like, oh, I if I use 15 basis points a year or 25 basis points a year, that'll, in 4 or 5 years, it'll give me a 100 basis point reversion cap rate. So if I bought at a 5 and I use a 6 cap to do this reversion, and I say, okay, I know I'm playing safe. That's 100 basis points or greater is pretty good. And I just heard the reverse of that from Monique. When you're buying at an 8 and you're selling at a 4, you are crushing.
That was
You just crushed it.
that was
So
crazy. And which is awesome as a
big time
seller,
return, huh?
scared the crap out of me as a buyer. I won't lie. I was like,
Yeah,
"What? People are willing to pay that for that
yeah,
asset?" I was like, "This is not, we're not in New York City A class."
yeah,
I'm like, "This is Albuquerque." Right?
yeah,
Like,
yeah.
C minus. Like, it's not a good whatever. Anyway, so I was
Yeah.
like,
You're happy to
"Okay,
sell
that's."
it. Yeah, on the selling side, happy to
Oh
sell it.
yeah, selling, I was super psyched, as a seller. As a buyer, I got very, very, very nervous about the
Yeah.
pricing that people were paying for multifamily.
Yeah.
And
What year was this? This
this
was
was late 2018.
okay. Okay.
So, in 29, so I was like, let me
Yeah.
look at some other asset classes, because the demand for multifamily is so strong. It can be really challenging to find deals that make sense, or
Mhm.
where and even in this economy, it's just continued to go up.
Cap rates are still compressing, and even after
Yeah.
COVID, when people are, people at the beginning of the year were like, "Oh, as a buyer, there's going to be properties on discount and distressed properties, and the cap rates are going to go up, and I can buy basically a lot of real estate and a lot of doors for a low price." Actually, the opposite has almost occurred, which is the in the right markets, obviously the right markets properties have increased in price because they've basically withstood the test of COVID at this point anyways. But that what that means is it's super competitive. Prices are cap rates are compressing, and it's harder to find that gem of a deal.
Yeah.
So absolutely.
Yeah, even in a so we're selling one of our multifamilies now, it's under contract, and that property had gone down in income through COVID, but the
The value is still way up from where you bought it.
yeah. Yeah. So anyway, so I started looking at industrial. I was like, where else can we look? And so we started looking at industrial and we got some industrial. We did get multifamily in 2019. Um, but we started to look in the industrial space, and then last year in 2020, that's all we did.
Cool.
Um, so
What
we're
kind of when people say industrial, maybe give us a little bit of insight to that, because I know that could mean a lot of different things.
Yeah, it can. So we have what I'll, we got in 2019, we got like six industrial. There's sort of like office parks.
Hmm.
So business, so they had all sorts of businesses in there, from a garage and a bakery, and there's even like churches. It's good, like warehouse space that can be configured single story in lots of
Hmm.
different ways. So that particular investment, some of the smaller businesses are challenged. So some are doing great. We have 109 tenants. Some are challenged, some are doing great. The what Because it's like slightly industrial, slightly on the retail side.
Hmm.
Um, and then on the what we've been more focused on this past year, it was sale leaseback. So what sale leasebacks are
Yeah.
is for those of you who are listening and don't know, so if a company has a facility that they're using, so this is like a manufacturing facility, food processing plant, uh, and they want to sell it because they want to get equity out of it, but they still want to use it. So they sell it and then they lease it right back. So they go from being the owner to the tenant, and with a triple net lease. And a triple
Mm,
net lease means that they pay a rent, they also pay all the property taxes, they pay all the insurance, they pay all the maintenance. So if there's a toilet issue, they deal with the toilets. If there's a
hmm.
roof issue, they deal with the roof. If there's a foundation issue,
Hmm.
they deal with the foundation. It's
Taxes,
really, yeah,
insurance, the
it's
whole ride.
really, really nice in that way, because there are a lot fewer moving parts on in that side, and with the very similar returns for our investors of multifamily, but with just like so many fewer parts, because you have one tenant, a very strong tenant. They'll come in with a 20-year lease, built-in rent increases, and what we do after a few years is we'll sell it to an institutional buyer. Uh, um, so the the one risk with that type of deal is the tenant. So we just
Hmm.
need we do a lot of due diligence on the tenant to make sure that they are great, well capitalized, they're not going anywhere. What's nice is we're seeing their business in this economy.
Hmm.
And so the ones that we're doing, they're very strong. They're essential businesses. They've been thriving now. So they're not like, and but most of the ones we've done, I think the youngest business was like 17 years old.
Yeah.
Mostly they've been around for a long time. They're not going anywhere.
Yeah. So
So
awesome.
yeah, that's what I like. And those have been
Yeah.
wonderful, wonderful deals.
We did our first triple net sale lease back this year too, and I'm a super small minority owner, but in the deal it was pretty cool just to watch some experts and pros just like you partnered with veteran team. They did a bunch of deals, but we bought a portfolio across three different states. And the industrial that they had, just as you mentioned, they are business. They run their business out of the industrial park. However, they're not real estate guys. Company entity buys the company, and they
Yeah.
realize I don't want to own this real estate. I just need the business to operate here. So they sell it to us. We lease it back to them. 20-year lease. And the first time you do that, I looked at the pro forma was what was pretty cool, because if there's active partners or general partners that are doing underwriting right now, if you guys are listening, when you're looking at a multifamily deal, all of the top line is okay, this is your income, and then the bottom half is expenses, and you're trying to normalize this stuff and look back and forth. And then when you do a triple net lease, you're like, oh, there's a lot less lines on this expenses side,
Almost
like
no
none of
expenses.
it. Yeah. And then you're like, okay, well, how do we account for our growth? And we're like, well, it's actually a 20-year contract, and they're signing up for 2% increases a year. Like, so it's not really an assumption. It's a contracted, that's what's going to happen. You're like, oh, okay.
Yeah.
But like you said, the risk is the company. And so underwriting turns to the company and the business, how long they've been in business, and cash on hand, lines of credits, their credit score. You still have to underwrite something, but
Yeah.
if you can find, the right company and the right deal, and that it was an awesome deal, and we were super excited to get into that one.
Yeah. So I love these deals. Um,
Well,
they're they're one of, there's always risk in real estate, but
sure.
they're, as far as risk goes, they're on the lower side for sure.
Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. So tell us about so how your passive investors play into this. Yes, two-part question. Sorry to kind of get into it, but there's two parts that I think. How do your investors work with you? And then give some general good advice for all the passive investors that are listening to us today. I hear probably some of these terms: cap rate, triple net sale, lease back, the right market, reversion cap rate. And, we kind of know it because we're on the operating side, or the buying side, but they're just looking for the best possible deal. I want to make my 100 into two. How do I
Yeah.
do that? Right. So can you illuminate this a little bit, how passive investors kind of work with you? And it's similar to us, I'm sure. And then also, what they should be aware of as they're investing passively.
Yeah. So, um, with me, there's an investor club on my website, ariagassis.com. Actually, for the guides of our more general investing, it's like VIP-assets.com. So people go, they click, they
Yeah.
join, they fill out the thing and get into a conversation with us where we get to know who they are as an investor, what they're looking for, establish that pre-existing relationship.
Mhm.
And then and I'm on these conversations, I do a lot of educating as well. Just so, okay, here's the types of things you're going to see, and here's what's it.
Yeah.
I just make sure it's like you understand this. Plus, a lot of my investors too are my students, to their learning, but I want to just make sure that they have this level of sophistication enough to understand the deal. Because for a passive investor, I mean, the main thing you need to be able to vet the opportunity and
Hmm.
see if it's a fit for you. And really that's about vetting the team, the sponsors. Are, are you comfortable with them? No, like, trust. Do they have the ability to do this deal? And then beyond that, it's the market. Then you look at the deal.
Hmm.
It's
Hmm.
really team first that I recommend. So you look at the sponsors, and then if the deal makes sense for you, because once you're invested, all you do is you wait for your money to come back with friends, right? So
Yeah,
yeah,
that's awesome. Yeah, that's a good explanation, a good understanding of it. And I kind of tell everyone the same. You're looking at the deal, the market, and the team. Those are, you have to get at least a high level understanding. And if you're providing education for them to be sophisticated, now you're like, oh, okay, well, I know what to look for, and you're teaching them, educating them through the process. And I agree. I think a good syndicator is somebody that works with passive investors that should help their investors understand what they're getting into, and
yeah,
learn more about their goals and what they want to get done. So that's awesome.
yeah.
Give us maybe a couple of I don't know, some success stories, or maybe from a passive investor lens, some of the feedback you've received from your investors. Have you had anybody just, they were super skeptical and then just knocked it out of the park, or any of those? It'd be awesome to hear.
I think by the time they invest, they're not usually super skeptical because
Hmm.
if you're gonna clunk out 50K, right, or
Yeah,
100K, whatever it is, the
it's a good chunk
minimum
of change.
at that point, you've gotten past that comfort level. And I never want anybody to invest in anything that they're uncomfortable um or they don't understand. But I you know our we had a deal that we were able to like sell, like buy in, build equity, sell pretty quickly with
Hmm.
like 70% returns, and that was nice. And I
Yeah,
kind of want
we'll
to, like,
take that.
I almost like don't want to talk the others. I was like, results not typical, but it's like,
Yeah,
he's like, don't come in expecting 70%
yeah.
returns. Like, that's not typical, but it's nice when it happens, right? And the market, even with the craziness right now, the the tide has been rising, and it has helped for sure with returns. So
That's awesome. Well, great, great to hear.
yeah.
And on your first passive investments, I think I heard 800 doors passively before you kind of started on the active side. Is that right?
Yeah, actually my first deal was active.
Okay, okay.
And
Oh,
then
that's
I
awesome.
and so I
Well, what
we
is it?
actually
Tell me
sub
about this mindset then. Sorry to cut you off. Tell me about the mindset of that. Like, to get into your first deal actively, that's, probably some obstacles and hurdles.
Sure. Well, first of all, I did not do it alone because I don't, this is definitely a team sport, and I really believe in being around and working with people that are at the next level. I've learned from one of my mentors about, I look for the three C's whenever I'm working with somebody. So the first C is their character,
Hmm.
right? Like, who are they as people? I look at how they treat other people, not just me, but if we're at a restaurant, like, how are you treating everyone around? How does do you say what you're are you honest? Do they say what they do? They do what they say what they do, they'll do. And then the second C is their commitment. And do they have a commitment to the project, but also to shared mission, vision, values? I will only invest where we can leave a property in a community better than we found it. Not about being a slumlord, taking every dollar out of a deal. Like, that is zero interest to me. And so it's really important that the people I work with share that.
Yeah, yeah,
Also, relationships for life philosophy. I'm not transactional in terms of how I want to work with people. I want us to work together forever, and vice versa, right? So I treat
yeah,
them well, and I expect them to have that similar philosophy. And then the capacity. So look for people that are great at what they do. In fact, I've learned work with the best. They won't cost you money. They'll make you money. So I try to seek that out
Mm,
and work with them. So,
such a great
uh,
lesson.
oh God, I have definitely made that mistake of trying to go with cheapest, thinking
Me
because it's
too.
a numbers game, right? So if you
Me
just
too.
go with cheapest, that'll be better. It's like, no, you end up just hiring the better person to fix what the cheap person did. Um,
Yes.
and it's much less painful to do it to work with the best possible. So I looked for that and I sought that out and I was always and I am paid a lot to get mentorship and get guidance throughout. So I never, especially like I said, especially taking on other people's money, I needed to know. Maybe it's the lawyer in me, and I just didn't want to. But still, but it's also the fact that it's like it's like I have this level of care with my own money, but with other, it's like I can't sleep if I'm, it's my, I don't like to lose money, but I don't want to lose anyone else's money.
Yes.
So even though I was new, I wasn't doing this alone. So I had mentors here and I had experienced partners. And so we were in it, but very well, I felt like very well insulated with this like amazing team
Yeah.
supporting.
I did the exact same thing. I'm smiling and I'm excited because this story, if somebody is trying to figure out how to get involved on a deal or your first deal, or you're trying to be a passive investor to eventually become an active investor, and that was 100% my easy button. Not that it was necessarily easy, it was just simple. I paid for coaching, I paid for mentorship, I paid for training. I joined like 4 or 5 programs. I'm in 3 masterminds today. I went to a bunch of different cities. We traveled all over the country when we could before COVID. And then I ended up partnering on my first, 4 or 5 deals, 100% with people that I thought were better than me. And number 6 and 7, I still think they're better than me now. I just have a little more value to offer. But it's 100%. I did the exact same thing you did.
Yep.
Yep.
That's how you do it. Anybody who's there thinking, I'd love to get into this, you can do this and you can start, but you can't start alone, probably, right? Like you
Yeah.
just,
Yeah. Yeah.
I wouldn't
No.
recommend it, especially if you're taking on other people's money because
Yeah.
you
With
want to
your own
work,
money, maybe.
yeah,
Yeah.
work with the best, but when you're just starting, you're not the best, right? So it's not
Correct.
like, but you can build the best team.
You can.
Yeah, but
That
build that team.
that part served me very well. I learned that in my professional career. We had a lot of success in IT and tech, and I try to put people that I thought were better than me around me. And if they were not better than me, and I was hiring from a different role, I knew they were 10 years younger than me, or and I go, this person will or could become better than me, and those are the people that I tried to hire, and it led to a lot of success. And I've realized it's translated very well to commercial real estate.
Yeah.
Very well. So that's awesome.
Yeah.
Well, I know we're getting close to the time, and I want to make sure that we, highlight you for a second. If somebody wants to get into your world, if there's some individuals that resonate with Monique's goal for helping 1 million women achieve financial freedom, what's the best place that they can reach out to you and maybe get some more education? I know you have a podcast, you do education, et cetera, et cetera. Give us all the places that we should reach out, Monique.
Yeah, sure. So if you go to reigoddesses.com, there you can find out about our podcast, which is Real Estate Investor Goddesses Podcast. I'm also at REI Goddesses on all the socials. But yeah, on their website, REI Goddesses, you can connect with all the things. We have some freebies, gifts for just free training, a free guide for anybody. And yeah, please connect.
All right, that's awesome. And I would love maybe some recommendation of some strong women, high performing individuals that love to be on podcasts, because I learn from every single person. And I realize in my relationship, the strategic one in my household is my wife. I'm hardcore, just action taker. I like education. And then I like to just bull forward. I'm going to just do the next thing. I don't know, what exactly the outcome, but the next thing is this. Okay, let's go. And my wife is the one that when we have these conversations about a next deal, about a next team, about their performance, I end up going to her and laying it all out. And she's like, yeah, I think we like this deal. And I'm like, I agree. I love it. So, she's my high strategy. So anyways, any referrals you can provide me, that'd be awesome. I'd love some more
I
guests.
have so many. I've interviewed over 100 incredible women on my podcast, and
Wow. That's awesome.
yeah, that are badasses in the field. Let
Yeah.
me know.
All right. Congratulations. I might just go through the podcast there and pick
You'll
a
know
few.
it.
Well,
This one. Yeah.
is there anything we haven't talked about today that you really wanted to bring additional exposure to, or you were, excuse me, hoping I asked and just didn't? Anything you want to talk about before we go?
I can't. I mean, we could go down a whole other rabbit hole with this one, but I do love that you are working with your wife. My husband is my business partner, and he's support even on the real estate investor goddess side. He's like supporting completely my mission, and we invest together. We have a retreat that we're doing uh, that we've done and are doing again this year. It's called the Real Estate Investor Soulmates Retreat. So it's about like it's for
Wow.
couples that want to learn how to do this game in a way that increases their income and their intimacy, wealth, and love, because you can use this process to bring you closer and, you know, help your financial goals, but work your love goals too. So we have that.
That's awesome. Well, that's great. I've appreciated this time so much. It was good to learn a little bit more about you and hear about some of the things that you're doing. You've had a tremendous run so far, and it's just getting started, is what it sounds like on the commercial real estate side. So I'm excited for you and wish you a lot of success. And God bless you and everything that you do. And thank you very much.
Thank you so much for having me.
I appreciate it. So again, my name is Abel Pacheco. I'm the host of the 5 Talents podcast. If you heard something today that brought you value, which I took at least a page of notes. I know there's some for you. Please go to our podcast, subscribe, leave us a rating and a written review, and also do the same for Monick. It sounds like she's got an amazing platform, and you should really look and support it. And if you've heard something today on our podcast, go leave a note on hers and give her a little review and say, hey, I heard you on the 5 Talents podcast with Abel. So I'd appreciate it. And thank you very much. Appreciate your time. See you next week. Thanks, Monick.
Thank you.
All right. Bye-bye. Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.